The Minority Market. Episode 26. How to Analyze a Business Like an Owner. Most people approach stocks like lottery tickets. They buy hoping prices will rise and sell when fear appears. Business owners think very differently. When you analyze a company like an owner, your mindset shifts from short-term price movement to long-term value creation. This shift alone separates the minority from the majority. An owner does not wake up every morning checking the market price of his business. He focuses on customers, operations, cash flow, employees, competition, and future growth. The minority investor learns to adopt this same perspective. Instead of asking, "Will the stock go up tomorrow?" they ask, "Is this business becoming stronger over time?" The first thing to observe is how the company makes money. What is its core product or service? Who are its customers? How stable is demand? A business that relies on temporary trends or seasonal spikes carries higher risk than one built on consistent everyday needs. The minority prefers businesses that solve real problems and provide ongoing value to customers. Next, look at the business model. Does the company earn revenue through subscriptions, repeat purchases, long-term contracts, or one-time sales? Recurring revenue models often create more stability and predictability. They allow companies to plan growth and manage expenses more efficiently. Understanding this structure helps you judge future sustainability. Cash flow is another critical factor. Profit on paper does not always mean money in hand. Owners care about cash because it pays salaries, invests in expansion, and protects the business during difficult periods. The minority observes whether a company consistently generates healthy cash flow or constantly depends on external funding. Debt is also part of ownership thinking. Borrowing can help businesses grow, but excessive debt increases risk. During economic slowdowns, highly leveraged companies struggle to survive. The minority does not avoid debt completely, but evaluates whether the company can comfortably service its obligations without sacrificing long-term stability. Management quality plays a powerful role. Owners know that leadership decisions shape the future of a business. Are managers transparent? Do they allocate capital wisely? Do they focus on long-term growth or short-term stock price performance? The minority watches actions rather than words. Consistent decision-making over time reveals true leadership quality. Another important aspect is reinvestment strategy. Strong businesses reinvest profits into research, infrastructure, marketing, or expansion. Weak businesses often chase short-term gains without building long-term strength. The minority prefers companies that balance growth with financial discipline. Competitive position matters as well. Is the company gaining market share or losing it? Is it defending its advantage or slowly being replaced by better alternatives? Ownership thinking means constantly evaluating whether the business remains relevant in a changing world. Risk awareness is also part of owner mentality. What could damage this business? Regulatory changes, technological disruption, supply chain problems, or shifting consumer preferences can impact long-term survival. The minority does not ignore risks. They identify them early and consider whether the company has the ability to adapt. Here is a simple exercise. Pretend you are buying the entire company, not just one share. Ask yourself, would I be comfortable owning this business for the next 10 years? Would I trust its management? Would I understand its customers and industry? This mental shift transforms the way you analyze stocks. Ownership thinking also reduces emotional trading. When you view stocks as partial ownership instead of trading instruments, you become less reactive to daily price movement. Temporary volatility becomes less stressful. You focus on business progress rather than market noise. The minority understands that true wealth is built by owning strong businesses over time, not by constantly jumping in and out of positions. Patience becomes easier when your confidence is based on business fundamentals instead of speculation. Another powerful benefit of owner mindset is clarity. You stop chasing trends. You stop following tips blindly. You begin building a personal investment philosophy based on logic and understanding. This clarity creates consistency in decision-making. Remember, markets will always fluctuate. Prices will rise and fall. News will create noise. But businesses grow through innovation, execution, and customer satisfaction. When you align your thinking with business reality, you reduce emotional mistakes and improve long-term outcomes. As you continue your journey with the minority market, keep training your mind to think like a business owner. The more you practice this perspective, the more natural it becomes. Over time, this mindset will help you build discipline, patience, and long-term confidence in your market decisions.